Good afternoon, everyone. This is Christy with Ahn Co. It's Tuesday, April 23rd. I'm going to go over the markets with you for the day. It was a washout of a day here into the soybean market, down over 15 cents. It does seem like that soybean market really wants to be chasing a contract low. We are 9 cents away from it after today's close. So 8.53 on the May contract is a May contract low, and you're trying to get there. 8.62 right now is where you're at. So overall, just seeing that washout. And the fact is, managed money is not record short holding soybeans as well. And so we need to be able to kind of give it a little bit of room, see if they're going to do what they've done to the wheat and corn markets and get down there. And with that, it kind of pulled the corn market down with it as well. 3.5 cents lower. We did make new contract lows once again into the corn market. Wheat was able to stabilize itself, however, anywhere from a penny to 3.5 cents higher. That was nice to see, as KC wheat actually traded lower a chunk of the day. So to be able to see it close positive, hopefully we are rounding it and finding a little bit of a bottom and some support into these markets. But overall, it really comes to the theme, no news is bad news at this point, and we're just struggling to get that kind of incentive to push these markets higher. And it's hard to fight off managed money when they want to be sellers here in this market. Over in the meat market, it's a little bit of weaker tone for live cattle and lean hogs, as they've really been on a tear. You have managed money adding links, and maybe you're seeing just a healthy little bit of a pullback, where feeder cattle offered just some slight support, probably due to the fact that corn was lower. You also had outside markets that could have played a possible role in here. US dollar was up almost 40 cents majority of the day. You are at recent highs that we found both in December or last December and March. And so whenever you have that dollar up there, it does put a little pressure on our commodities, as it makes our commodities more expensive for foreign nations, and we really need export demand to pick up here. And with a US dollar that's rallying, that makes it a little bit more difficult. So even though we've seen a liquidation in prices, with a US dollar that's rallying, our base price is still probably about the same for foreign nations. So they can see cheaper alternatives other places, specifically Ukraine for wheat and corn, or South America for beans. And so that's been a little bit problematic. So hopefully we'll see some sort of stabilization. We got good inspections reports yesterday for corn and wheat, and hopefully later this week we'll be able to see some good export sales, because we do need demand to pick up for those markets to kind of turn this market around. So moving forward, what we're going to watch is just these weather models. They continue to look a little bit problematic for some planting in a lot of areas, so we'll be watching that to see if eventually this takes over how the market is trading. I do have to close with a disclaimer: trading in futures and options involves risk loss and is not suitable for all producers. Have a great day.